Don Kaufman here, September 2nd, 2020, and you are watching the TheoTrade evening video. The Nasdaq, it just continues to charge higher. But if you missed some of the intraday trade, well, what you missed was a 260-point sell-off followed by, well, right now about a 250-point rally, but we're giving some of it back. You got about 10 minutes left in the trading day, and people, it is just downright sketchy out there if you are trading Nasdaq. What I intend to do on this evening's video, listen, I don't want to talk about the fact that the Nasdaq is downright sketchy. We could probably talk a little bit about the reappearance of the bidless beast. There are literally 50 to 60 point moves in a 1 minute candle here inside of the Nasdaq. You don't call that sketchy? I don't know what you do. All right, here we're actually looking literally this minute coming into the cash close. This is actually a move from 35 all the way down here to none other than 10. That's a 25-point move inside of literally the last minute of trade. Volume is surging as we come into this closing minutes of trade. Push that aside for a second. There's a lot more going on than the Nasdaq just getting downright sketchy. But again, what we're going to talk about tonight, number one, what is going on inside of the marketplace that absolutely should strike fear in the hearts of all traders, okay? And number two, how you need to approach this moving forward. One thing that I want to be, okay, all over right now on these videos, on TheoTrade chat, you're going to approach these markets, you better know exactly how to do it. So when things do turn, I mean, listen, a 260-point sell-off, if that ain't a warning shot, I don't know what is. Here, I'll give you another warning shot. The marketplace is flying to the upside and volatility is also surging forward. I mean, you have the volatility futures up by almost 2%. The VIX is actually up almost to the 27 level. Yeah, markets are going up, volatility is going up. That's only happened a handful of times in any recent history inside of the marketplace, but push that aside. Let's start to talk a little bit about strategy surrounding this market. In fact, before we do so, I think it's also, okay, a critical point to be made that the S&Ps are surging forward today. And as the S&Ps surge forward, again, the volatility is up out there. And here's also a very key point to be made for today's trading session. We're halfway through the trading week, and yet we're already outside the expected move. The expected move this week was plus or minus approximately $62. The irony is, well, we've already pretty much moved that in today's trading session. I mean, today, you've only got about, 7.5 minutes left, but it's far from over out there. Again, markets, they just turned into a sketchy mess throughout the course of this trading session. So let's get to work. You know that the S&Ps are outside the expected move. Let's actually cruise over to the Nasdaq and apply auto expected moves. It too, well outside the expected move. So you're already seeing a little bit of, if you would, an extraordinary event. Why would I call this an extraordinary event? Well, here inside of the Nasdaq, clearly you've been outside the expected move, and once again, we're outside that expected move. The Nasdaq is just all about being inefficient. The options market is doing a terrible job of being able to handicap the risk, of the Nasdaq, which immediately leads us to a point. When you see markets that are continually outside the expected move like this, and you think like, wow, the options marketplace is getting it wrong. I mean, that's what it means. Cruise back over to the spiders, the SPX for a second, and you take a quick glance at the spiders, and the spiders are outside that expected move. The way that this works is, well, there should be like this $6 move to the upside or a $6 move to the downside. And we're not moving $6. We're moving considerably more than that. That's your advantage, and you need to know how to take advantage of that by going out there and being a premium buyer. And that's exactly what we've been doing. I've been executing gamma iron condors pretty much ad nauseum. I've been firing off gamma iron condors in the spiders in Baidu, in Home Depot. I mean, I can go on and on. Target. I actually took one off in the spiders today, executed into another one of the spiders. I've got one on the IWM. I've got one on the TLT. This is a buy-side party going on right now. So why bother buying the iron condor? Well, because we'll be right to the upside until the one day where markets do actually sell off viciously, and that iron condor will also be there to see some degrees of profitability if we sell off. right? So speaking of a little bit of a sell-off, well, that little sell-off was a momentary lapse of reason as we've got a bid back under us here coming into the cash close. The Nasdaq, though, weak versus the S&Ps. Again, downright sketchy. So what I really wanted to get to, okay, is in the meat of this evening's video, what you need to do to protect yourself right here, right now. And to me, that's the most critical aspect. You know, if you're not out there with gamma irons, like, listen, I get it, okay, this is an experience level trade, but there are a ton of new traders running around in this marketplace, okay, completely unaware of the dangers that kind of lurk in the marketplace. And if you think this is normal, well, it couldn't be. That could not be anything further from the truth when you're seeing, again, markets just up day in, day out, fever pitch, volume surging, you know, again, volatility up with the marketplace up, the VVIX, which is the volatility index, cresting over the 120 level today. I mean, people, this is just dogs and cats living together over here. Here, okay, is a very strong suggestion to you if you're going to carry positions right now. Number one, you might love them, you might know them, okay, but holding long positions in stuff like Apple and holding long positions even in Facebook and holding long positions in any of the major tech stocks, okay, you could get ended literally in one trading session. You don't believe that? Just take a look at the, Apple on an intraday basis. And there's a critical point that I want to make with this. This is a 3-minute, okay, period of time. This is all the way down to the 1 day, 1 minute. And I wanted to show you in Apple, okay, how serious this marketplace has become. Effectively, Apple was trading right at around 133. Within 1, 2, 3 minutes, we actually had a low of 127. Okay, how do you feel about the largest market cap? A market cap now, the Apple is bigger, okay, than the entire Russell in terms of market cap. How do you feel about the fact that it can move $6 inside of a 3-minute period of time? Okay, seemingly out of nowhere. There wasn't any big like surges going on in the marketplace. You start looking around the marketplace, other stocks were unimpeded. This is just a big algorithm coming in and smoking Apple a little bit earlier in the day. And you got to realize, okay, I'm not telling you don't be long. And I want to make that clear. I'm not telling you don't buy Apple. I'm telling you don't buy the physical stock. Don't go out there and buy Apple. Don't hold Facebook. Anything you're holding overnight. Listen, when the music stops, you're not going to have time to get out. And that's the funny thing is everybody's convincing themselves, I'll be able to get out. Listen, this looks like a retail-driven frenzy that we have on our hands. And at the first sign of real sell-side activity, okay, if this is a retail-driven like frenzy, these aren't professionals. These people are not hedging. They don't know what the hell to do when the market starts to sell off. Within 72 hours, this is going to turn into an absolute, hideous beast of a marketplace if there's going to be a real sell-off anytime soon. So what do I suggest? If you're not going out there and buying the shares of Apple, okay, you turn to the shortest duration possible. Okay, turn to the shortest duration option possible. Use an 85 delta or greater. Just buy an in-the-money call. That's it. Don't be buying this out-of-the-money call garbage. Again, because what I'm trying to do is tell you, going out there and buying like 100 shares is going to get you into some pretty serious risk. I think we would agree that Apple could have a wicked sell-off and actually lose, what, $20, $30 almost overnight, okay? Easily overnight. You saw $6 inside of a 3-minute period of time. Here, you go out there, you risk no more than, what, $7. At the end of the week, you just roll it. You're going to roll it forward to the next expiration. Roll it forward, roll it forward, roll it forward, roll it forward. Don't go out there and use 79 days. Use the shortest duration possible. Why? Commissions are dirt cheap. Who cares? Who cares that you actually have to move the position, pick it up, okay, and eventually move it, what, to 9 days out? Use short duration options in lieu, okay, in lieu of stock positions. That's one way you can do it. Another way you can do it, for those of you that are a little bit more skilled, use some back spreads. Ratio back spreads right now, phenomenal. Another way you could do it, use gamma irons. That's what I'm doing. I'm using gamma irons. Why? Because the things are incredibly consistent. I mean, incredibly consistent. I don't mind opening up. I'll detach like some of my order book just for today. Okay, my order book is absolutely filled. I'm cancel replacing. It's just a one-lot haven out there. A whole lot of one lots are adding up. Captain One Lot rides again. all of these are gamma irons. I'm buying them, I'm selling them, I'm actually closing them profitably. Okay, it's a free-for-all in there. Why? Because the marketplace is exploding. Again, exploding outside of what it was expected to do. Again, what I'm actually bringing to you, and there's the closing bell. So what I'm trying to bring to you here is to keep you intact, okay? Intact, alive, your head above water when this marketplace does. There's some more gamma irons that I did not fill. When this market does turn, and you can feel it inside of the marketplace getting sketchy. You can feel it inside of literally everything you're trading right now is kind of fever pitch. That fever can last quite a long time. But when it turns, you can't get caught long stock. I don't want to hear that you have a stop order because you're going to wake up into a marketplace like this morning. You woke up into the Nasdaq was up over 100 points. In fact, in the overnight trading session, just to bring this up really quick, in the overnight trading session, Nasdaq actually crested all the way to 12,465, its all-time high, before actually trading all the way down to 12,175. Again, the ranges are huge. That's why I'm telling you, it's a fever pitch out there. You're not going to be able to get out when you want to get out. So what do you do? Okay, use options, define your risk, use spreads, okay, in any way, shape, or form. I'm just telling you, again, expect right now with this fever pitch that you're going to have some wild trading days. And again, if this is all retail driven, by the way, speaking of retail driven, look at this. That's some serious volume. 1.7 million S&P contracts traded today. Okay, hats off to that. That is a big, big number. Again, fever pitches everywhere. And as I said, if this is retail driven, at the first sign, okay, where the dip doesn't get bought, they're going to run for the hills. You got 72 hours to bail out of all your positions if you even get that amount of time. I'm telling you, don't get caught holding the bag of risk. This is a wild marketplace. Okay, anybody that's been in this business 15, 20 years is going to tell you, hey, this is right up there with one of the most insane things that anybody has ever seen. Okay, nevertheless, you still got to trade through it, protect yourself. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.